and welcome to Banking on Growth. In this episode, we dive into the topic of wealth management services and how a properly run wealth management division can be transformational for community banks and credit unions. Changing consumer tastes, high inflation, a rising interest rate environment, and an increase in regulations has led community banks' reliance on non-interest income. This is where wealth management services come in and where we can assist. Throughout this podcast, we'll chat with industry professionals and thought leaders. These industry role players are at the forefront of developing creative solutions to assist banks in delivering financial advisory services to their clients. We'll examine the most recent developments, technology, and best practices for providing high-quality financial advice. We will chat about the regulatory environment that controls these services. Join us as we explore the world of investing through the community banking lenses. I'm Cassie Tarabelletti, Executive Vice President and Chief Operations Officer of Midwestern Securities, and your host for today's podcast. Today, we are talking to Michael Graham, Certified Financial Planner and CEO of Midwestern Securities. Mike has been investing in and consulting with community banks for over 17 years to maximize stakeholder value, starting with cultural change driven through the implementation of a proactive and accountable sales and service culture. He serves on the board of directors for a local community bank and is a shareholder in the bank. He has helped many community banks and credit unions develop impactful ways to combat the decline in demand for traditional bank products by offering something their customers truly want and need. A producing financial consultant for more than 25 years, Mike co-founded Midwestern Securities when he couldn't find a broker-dealer who would give his team the attention they deserve. He understands the need for a strong, attentive, and compliant back office, which is why he is passionate about sharing it with others. While future episodes of this podcast will feature Mike interviewing experts in the banking industry, we wanted to start this first one by hearing from Mike what he believes will drive growth for community banks. Mike, welcome to our first podcast.
Thank you, Cassie. Glad to be here. Excited for this.
All right, let's get started. First question. I think our listeners are generally familiar with wealth management, but marrying it with the banking world can create some complexities. What is the role of wealth management services in the banking industry, and how does Midwestern Securities cater to the unique needs of banks?
All right, big question. Lots of areas in there to talk about. So, number one, community banks need customers to work with. Customers need financial services. They need more than just what traditional community banking has been, taking deposits and making loans. So, it is a customer need that people have. We want to provide a value-added service to those customers who are seeking more than just traditional banking, more than just deposits and loans. Consumers need more financial advice, more financial advising support, and there's no better place to get it than their community bank that they've known and trusted and been in their community their whole lives. So, customers need it, and they've got to get it somewhere. They might as well get investments in financial planning business from their community bank. And community banks need to diversify their revenue streams. Ben Bernanke said this in 2009 at the Jackson Hole speech, that community banks need to diversify their revenue sources. They can't just live off of the net interest margin. So customers need it. We might as well provide it to them in an excellent fashion to help our customers be more prepared for their financial futures, from cash management, debt management, investments, risk management, estate planning. And banks are uniquely positioned to provide this and to provide this profitably and compliantly. The banks know that their competitive landscape has changed over the last 25 years, and the banks have to keep up with it. We know that almost all major firms are not just providing investment services, but are providing banking services as well, and driving a significant portion of their income from the banking services that allows them to give their other products and services away at a discount or for free in some cases. Customers know, basically, if they're not seeing a fee for something, they're getting paid for. They're paying for it somewhere else. If they see where the fee is coming from, it's usually less than if they think that it's free. And a lot of the competitors are giving the investment business away for free and underwriting it off of the money they're making off of their banking services.
All right. Thanks, Mike. That helps show the landscape of what we're dealing with here. Can you dive in a little bit more and tell us about the specific wealth management services Midwestern Securities offers to banks and credit unions and how it is different from the other providers in the market?
Absolutely. So, banks and credit unions, community-based financial institutions hire Midwestern Securities to build successful, profitable, and compliant investment services divisions. So they know they want to provide this. They know their customers need this, and they know that it can be a very profitable business line for them. Um, they they look to Midwestern Securities to put it together. So our relationships dealing with community banks and financial advisors are what we call a triangular relationship. So the bank and Midwestern Securities partner to build these divisions successfully, again, profitably and compliantly. We then recruit a financial advisor who is considered a dual employee of the bank and of Midwestern Securities. And then Midwestern Securities is in charge of training, coaching, and supervising that financial advisor to help them provide a very professional client investment experience where we're helping the clients be better prepared for tomorrow, increasing their income potentially reducing their taxes, potentially giving them more growth potential. For banks and credit unions that have not been in this business before, we that's where we started. We started dealing with community-based financial institutions, helping them build this, helping them start from scratch. What does their signage need to be like? What policies do they need to have? How does the spatial layout inside of the bank need to work to make sure that the examiners are happy? And that we're not confusing the customer on which side of the bank that they're on. Are they on the traditional bank side or are they on the non-traditional bank side, which is where we operate? So we have that expertise. We've been through this dozens of times with community banks, helping them get these programs up and running. From a bank's perspective that has been in the investment business before, though, we come in and this is where we're best received. They've worked with one of our bigger competitors. They've been lost in the shuffle. They've been one of 1,000 bank partners or one of 20,000 financial advisors. They haven't gotten the attention. They haven't had access to the decision makers. The programs have floundered. So where our program really stands out to the bank customers is where the bankers themselves as Midwestern's customer has been in these revitalization, or what we might also call a takeover relationship, where the bank has tried this with a bigger broker dealer. They've tried to provide investment services. They have floundered with it. It hasn't been profitable. And in some cases, many cases, it has had trouble with being compliant as well. So the community bankers have decided that they need to work with a smaller partner with similar cultural perspectives, similar views, access to decision makers, and they've had excellent outcomes. Our best testimonials come from bankers who have been there, seen what can go wrong, and see the lack of attention that they can get working with one of our bigger publicly traded competitors. And they find it really refreshing to work with us being privately held, being in the Midwest. They like being able to jump in the car and see us, or jump on a Zoom and get right to a decision maker. We don't have voicemail, and we want to be very receptive, very responsive, attentive to our customers. Where in our space, Cassie, as you know, a lot of the securities industry and the banking world industry has been commoditized. We and the pricing has been built around these commoditized experiences. That's not who we are, and that's not who community banks want. Community banks want attentiveness. They want personal attention. So we have to provide the commoditized trading platform, the commoditized research, the commoditized access to a variety of products. But we have to be able to deliver that with a much more human, responsive, reflective approach to solving the customer's problem. And Midwestern Securities does that. We are very relatable with our partners because we're just like them. We're involved in our community. We're involved in our business. We're not an ivory tower financial services institution that's connected, that's not even connected on their own floor, let alone to Main Street America. It's where we are. It's where we do business. It's where our friends and our families and where we interact is. It's much more relatable. It's hard for me to understand why a community bank would deal with a publicly traded broker dealer instead of a community-based broker dealer. It's like a community bank or credit union trying to understand why one of their businesses in their town would rather bank with a national bank that's nameless, with no access to decision makers, and nobody really understanding their situation, when they could have that better relationship. And again, delivering all the stuff that you have to be in business.
Absolutely. Thanks for those points. We know our community banks and credit unions. We know the bankers know their clients by name, by face. They walk into the lobby, they walk out, say hello by name. I was in a meeting with you the other day, Mike, where we were talking with one of our advisors, and not only do you know them by name and voice, but you ask about their kids by name and their family situation. I think that goes a long way to explain how we understand that community relationship.
Absolutely.
Yeah.
And it's not cliche. It is in the securities industry, right? The old NYSE rule 405, know your customer. We want to help our financial advisors know their customers better and provide great solutions, advice-driven solutions that helps their customers accomplish their goals. And as a broker-dealer and registered investment advisor, a hybrid firm like we are, our customers are our community financial institutions and our financial advisors. We need to know them, and we do, and we take a lot of effort and steps to know them, to help them build successful and profitable businesses within the banks, within the credit unions, and make sure that we're meeting the financial advisors where they are, and we're providing them leadership and guidance to be better financial advisors. That call that we were on, Cassie, that was one of our top reps and one of our rising stars within our footprint. And there's still 3 or 4 impactful things that came out of that discussion that will make that advisor more successful. But that's the difference between Midwestern and our publicly traded competitors. It is, the publicly traded bi-coastal firms versus us, privately held, Midwestern values, access to the decision makers, no voicemail, and we are hands-on. As you mentioned, I'm a CFP. I sit client facing. I know the same discussions that our financial advisors know. I live those discussions. So how can we grow, and how can we share that, provide that thought leadership to those financial advisors and banks and credit unions to make them more successful? We are a retail business, and we take those strengths and make our partners stronger at serving in their communities as well, through a consistent experience, but also with the flexibility and the ability for them to customize it and build their own brand, and with their own colors, their own fonts, their own stories, and their own communities. I think that it's a real value add for our financial institution partners to have that leadership that comes from us, but also the flexibility of owning their own business, making their banks stronger and more profitable in their own communities.
All right. Thanks, Mike. Perfect segue. Just to make sure, you formed Midwestern Securities because as a practicing financial consultant yourself, you were looking for a broker-dealer RIA who could give you more service, attention, and success. Other than what you mentioned, is there anything else you want to say about key factors banks should consider when selecting a wealth management services or investment advisory services provider? And how does Midwestern Securities meet those criteria?
Sure. So, as I mentioned, a lot of the product, services, technology, research in the securities industry and the banking industry are commoditized. There are clearing firms, there are core processors, there are the infrastructure, there are the research vendors, there are the products, um, and you know what community financial institutions need to understand though is there's a difference in expertise. There's a difference between the big firms who put stuff on their shelf and say, "Come and get it," and then they deal with the compliance fallout uh, as there are issues with some of those products and services from time to time. And I would encourage somebody looking for broker dealers to understand the broker dealer, the registered investment advisor that they're talking with, understand their compliance history. It's easy for them to find out. Go to FINRA, broker check. Um, but there is a difference between Midwestern Securities and our competitors. They We have a lot of great competitors that are great at taking orders, and great at putting things on the shelf. But there aren't. I don't think that there's any broker dealer, registered investment advisor, hybrid firm like us that is as good as we are at providing guidance and leadership to our financial advisors, to our banks and our credit unions, helping them be positioned for success. Again, not just one of the big broker dealers with everything on the shelf and a call center and a rep code that you call into, but knowing your customer, knowing our financial institutions, being in front of them, providing them leadership to build these divisions. So we are an LLC with about 3 dozen unit holders. Most of our unit holders are community bankers. Um, they are credit union execs. They are financial advisors. They are people in the front lines. This is not. They're not. They're not a department manager who's great at things in this department and they're siloed. They are leaders in a financial services institution that has to have a global perspective and has to have the team of experts to be successful, providing these other non-interest income sources, products and services. So our leadership group is made up of holistic leaders in community financial institutions. They sit just like our prospective partners do in those markets, whether it's a metropolitan market or a very rural market. We work in large metro markets and we work in small rural markets down to 400 people in one town, which, by the way, is a very successful investment division, as you know. So our intellectual capital, we know our stuff. This is it. We're not running a broker dealer that caters to everybody and putting every product on the shelf. We work with community banks and credit unions building successful and profitable divisions. Our focus, our attention to detail, our commitment by our leadership, our unit holders, I don't think anybody can compare to that. The depth of knowledge in this particular space, offering investment services, wealth management services in community financial institutions, I don't think there's a firm that can go toe to toe with Midwestern Securities. Of course, I'm biased, but I see it. I see it every day in takeovers, revitalizations that we do with our banks, and the startups that we work with as well.
Absolutely. We have really great relationships with our banking partners. How do you establish and maintain long-term relationships with partner banks and credit unions? And what strategies do you employ to ensure client satisfaction and loyalty?
Really good questions. So when we're working, we work with 3 dozen banks and credit unions. We could be 10 times the size that we are, and we'd still be small compared to a lot of our competitors. We'd still have the ability to build relationships and have these great relationships, like you were mentioning earlier with the financial advisor that we were on the call with. How do we do it? It starts with time. It starts with time to invest in each other. We meet with the prospective financial institution. We have many discussions, leader to leader. Most financial institutions are never going to get to the CEO of a publicly traded broker dealer ever, right? Most regional banks aren't ever going to get to the CEO of a publicly traded broker dealer. Here we are, the leadership team of Midwestern Securities, meeting directly with the leadership team of the community financial institution. It starts with time, getting to know each other, understanding how this institution works, what their strengths are, what their weaknesses are, what their opportunities are, what framework that we have, what challenges that we need to overcome. And we start to build, in a very consultative manner, a strategic plan of what we want this financial institution to look like in 5 to 10 years. And how does the investment division, the wealth management division, play into that? So what do we need to do? If we want X percent of the non-interest income or X percent of the bank's income total to come from wealth management services, what steps do we need to put into play right now? And what steps do we need to have in place in 5 years? What steps do we need to have in place in 10 years? And we start with the end in mind. What do we want this to look like? And what do we need to do to get there? So from these, meeting, spending time together, again, executive suite to executive suite, to our checklist of onboarding. What do we need to do to make sure that we're accomplishing these goals, accomplishing this, so we're positioning our financial institution partner to be as successful as possible, like whether that's assets under management goals, revenue goals, percent of the financial institution's income coming from non-interest income sources goals. What are those things that we're shooting for? And we go into we make a transition and start working with our compliance team and our we call compliance and standards, because it's not just checking boxes and making sure that we have all of the right forms on file to prove attentiveness to a regulator, but it's standards. We want to make sure that the programs that we're working with live up to our professional standards at Midwestern Securities. Again, being small, privately held, playing with their own money requires us rather, to be more attentive, to make sure that these programs are as professional as possible, that they're living up to not just the compliance standards, but the professional standards that we expect for our partners. So compliance and our operations team interact regularly. And then our recruiting team and training team. We put a lot of time into recruiting talent, developing talent, and retaining talent. So we're recruiting. We work with the financial institution's leadership to identify leads. We also have our outside perspective to identify potential financial advisors, whether they're people that are already licensed or people that need a path inside of the institution, and the path to being a financial advisor is a great path, or somebody in the community that the financial institution would love to have on their team. So we're looking for that talent all the time. When we find that talent that lives up to our compliance, our professionalism standards, and fits our culture and fits the financial institution standards and culture, then the financial institution of Midwestern agree, and we help. Again, in our consultative approach, we work with that bank and credit union to negotiate a compensation package. We bring them on board. We have a marketing team, as you know, that helps build the marketing program, and we work together to build a business plan. What are some tactical steps that we can put in place that accomplishes the strategic goals of the financial institution? Again, is our goal to get this investment division to 50% of the income of the bank? That's what one of our bank clients' goals are, 50% of their net income to come from the investment division alone. Right? So what are those things that we need to be doing to do that? And then from there, we have weekly, monthly, quarterly, semi-annual meetings, check-ins to measure the results. What gets measured gets done. We need to build the right team with the right people, with the right strategic vision, the business plan to accomplish that strategic vision. But then we can't just leave it alone. We've got to come back and train and supervise these financial advisors and the teams of financial advisors to gather the assets to price the business right, to build the business for long-term success. So all of those things, we're so involved, and we have such deep relationships that we do know their names, we do know their kids' names, we do know what's important to them, we do know what motivates them by the time that we invest in them. That again, this commoditized world of deal with everything online or in a call center where you're a rep code and you don't have that relationship and you don't have that commitment and access to those decision makers in the C-suite, you just don't have that same time invested. That time leads to all of those steps that lead to an above average outcome. We're fortunate that we're in the state of Illinois from a community banking perspective. Illinois and Texas have the most community bank charters out of all 50 states. So we have a lot of banks in our backyard who are in a very competitive situation because they've got more competition. So we've been able to understand them well. We've been able to build an expertise to help them. And they've wanted more guidance and more leadership, more coaching from us, because they know that to be here in a generation, they can't do things like they did 50 years ago. Out of the top 10 banks in Illinois that have investment services division, 3 out of those, according to Bank Trends, in a statistical survey of revenue per deposits, 3 out of the top 10 are our clients. They're outperforming. And a great deal of that is the time that we invest in this. We have to provide, again, all that commoditized stuff, and we have to have the same payout structure or similar payout structure as our competitors do. But since we don't have the national brand, we invest all this extra time. Where they get the extra value from us is in that time and that leadership and how it results in those greater outcomes like our clients have experienced.
Yeah, thanks, Mike. Do we wait for our partners to ask us for help with those that consultative approach?
So of course not. When we're talking with our partners, we're talking with, we segment our advisors depending on where they are professionally. If they need more help, they get more frequent help, down to daily and weekly calls, from time management to case studies. As our advisors and our bank partners become more successful, we change how frequently we talk, and we change what we talk about, and how do we keep challenging them to bigger futures. We're in the room providing them leadership and providing them guidance of what they need to be thinking about next. One of our favorite banks that we work with would, the first couple of years that we worked together, Cassie, you probably remember, he used to joke that it was time for his monthly call with the president of Midwestern Securities for me to tell him how to run his bank. And we joke about that. But we always look at these relationships as partnerships, not as a vendor relationship. Yes, we know a bank is our customer, and we need to work really hard to make sure that our bank and our credit unions, our customers, have excellent outcomes. But we don't play like they're customers. We play like they were partners. We love this business. We generally love most of the people that we're working with, and we want them to have great outcomes. We want them to think that one of the best professional decisions they ever made was hiring us and partnering with us. And some of our partners have said that. They've said something very similar to that. So we're in that room. We're providing leadership. We're saying the next thing we need to be thinking about is, you got really good at this. Now let's get really good at that. And that is a differentiator. And it comes down to time and the relationship. And that isn't, again, cliche. That is the difference between an order-taking firm and a partner in your success.
So how should a bank with a wealth management services division expect their broker-dealer RIA to communicate between leadership and the advisor?
It should be frequently, weekly or monthly, depending on the maturity of the advisor and the team. There should be quantifiable reporting that the advisor and the broker dealer are providing the financial institution. We should be talking about what have we done, what are we doing. We need to be looking into the future, planning activity. We need to be uh, reflecting and saying, what can we do better together? So there needs to be this open collaboration between all of the parties. And a lot of times inside of the banks and inside of the credit unions, everybody's busy. And they say, yeah, we talk a lot. See them in the break room, we're getting coffee, meet them, we're filling up our water. It's not a meeting. There needs to be a formal process that we evaluate the successes and the failures and the progress to accomplishing the activities in our business plan. So we're providing that. We're encouraging. We're reaching out to the financial institutions and saying we all need to get on the phone, a Zoom, in person. Midwestern Securities is in person very often inside of our bank partners, and we're on a phone call or a Zoom call regularly, again, weekly or monthly. But in addition to that, Midwestern Securities is out and about. We do what we call benefit builders, where we're training the rest of the bank staff on what happens in this investment division. Why is this investment division important to the overall health of your community? Why is it important to the overall health of your financial institution? Why is it important that you look to be successful as a team and collaborate as a team? Some of our bank partners have brought us in to expand on this benefit builder, which is, again, staff training around more holistic thinking of how these banks succeed together. Some of our bank partners have brought us in to train their loan officers. Hey, we've got some mental blocks with the sales processes. How can Midwestern Securities be a change agent for that financial institution to come in and change the culture one conversation, one department at a time, to a culture of inclusivity, of abundance, of an expectation of winning and an expectation of cooperation, and not an expectation of punching the clock and doing your job and minding your own business and going home and cashing your paycheck with the competitor down the street. No, these are all the passion, the intensities that we bring to our community bank partners to do things differently, to win, to be the dominant player in their marketplace. Many of them have to do things differently. Many of them have an interest in doing things differently. But the ones who hire us have the commitment to doing things differently and really want to invest the time and are willing to change and have deeper discussions with their customers on their holistic financial plan, again, from cash, debt, risk, estate, investments, to having a deeper wallet share with those customers, making a bigger impact on those customers' lives, driving more income, more profit to the financial institution for that, making that financial institution stronger. The financial institution stronger, it's not going away. Communities need these financial institutions like they need their own school district. It's part of their identity. It's part of the resources. If they don't have this value add, they go online for a commoditized experience. Commoditized experience, I really believe, struggles to provide similar outcomes and helping clients stay focused on their long-term goals, accomplishing what's really important to their families and businesses. I really believe that the clients who interact with us and our financial institutions have better outcomes because of these things that we've been talking about.
Well, Mike, thanks for your passion in that. This has been a great look into how a wealth management division successfully meshes in the community bank space. Thanks so much for your insight. What can we expect from future episodes of this podcast?
Thank you. It's my pleasure to be doing this and excited to be part of this. So the financial services world is changing rapidly. I think a lot of community bank and credit unions have been used to some of the old change issues that they may have grown numb to. Change issues like interest rates moving up and down and rate shoppers and hot money. A lot of them have heard this, and money comes back. And I think there's obviously cultural dynamic changes that are happening that may not be the same in the future, right? When you have less choices and you have more homogenous banking experiences like we did 20 years ago, 40 years ago, 100 years ago, that hot money rate shopping stuff goes back and forth. But now it's not just that limited dimension. Now it's on the phone, right? Gen Z doesn't go into banks. Everything's on the phone. Apple is in the banking business. How do consumer taste changes affect traditional banking? How does technology affect traditional banking? How does the regulatory environment affect community banking? So what's happening globally with geopolitical issues? How does that affect community banking? It is not the same old rate shoppers and hot money, and we play this game and it all comes back. Bankers need to think on their toes more. They need to be more aggressive, and we need to be thinking about the multifaceted dimensional changes that are happening in the financial services industry that we see all around us. Again, whether it's SoFi disrupting the space. How many people hadn't heard of SoFi before the Super Bowl last year? Whether it's Apple disrupting the space. We know that Walmart tried to disrupt the space and did, and State Farm and big firms have. But there is a lot of exciting things to be looking at and to be trying to understand. And we're going to be keeping our thumb on the pulse of what's happening, and we're going to be bringing back, I think, exciting business building ideas for our bank and credit union partners to be successful. We believe in the value of the human element. We believe in the value of relationship banking. We believe in the value-added nature that community financial institutions bring. Knowing their customer and helping their customers accomplish their goals, buy their homes, start their business, expand their business. It's unique. The commoditized banking experience, the online banking experience can't compete if we don't let them. And so we want to be bringing leadership ideas to our group of clients and prospective clients in community banks and credit unions throughout the Midwest and the U.S. To help them be better and compete in this changing environment. So there'll be a lot of interesting things like that, and obviously topics that we haven't anticipated yet that'll be timely that we'll be bringing back to this group.
All right. Well, I look forward to listening to those interviews with the bankers and financial advisors in the space who have met those challenges head on and how they found success and growth for their institutions. That's a lot to tackle. Looking forward to it. Lastly, Mike, how can banks contact our company to explore potential partnership opportunities and benefit from our wealth management and investment advisory services?
Excellent. So number one, call us. Call me directly. I'm Mike Graham. I'm the president of Midwestern Securities. Call Cassie directly. Our phone number is 309-699-6786. We do not have voicemail. We are here to serve. We want to talk with you. We want to help community financial institutions. You can also find us online at www.midwesternsecurities.com.
Very good. Well, thanks again, Mike. It's been really fun interviewing you and experiencing your passion today.
Thank you, Cassie. I appreciate your help with this. Appreciate your leadership in the interview.
But listeners, thank you for joining us today. Please join us again on our next episode of Banking on Growth.